Hey guys, so today I'm going to show you an 84% win rate strategy from TradeIQ that will supposedly replace all your other strategies because not only is it that good, but it's super simple and perfect for seasoned traders and beginners alike. I will give you all of the rules and then backtest it 100 times to find out its true win rate and how long it takes to find those 100 trade opportunities. Make sure you watch till the end because I'll also give you some tips that show you how you can set up alerts so that you do not ever miss a trade opportunity even when you're not at your screen. Let's dive in. We are going to backtest the strategy on the BTCUSD pair. We are going to set the time frame to 5 minutes, but this strategy supposedly works on all time frames. Okay, so this strategy comprises of 3 indicators. First, let's click on the indicators window and then search for Q trend by Tarasenko_. Next, let's add an indicator called fluid trades by PMGJIV. Lastly, let's search for money flow index and select this one here. Now let's edit the indicator settings. First, click on the gear icon here or double click on the Q trend. In the style section, let's disable the trend line. This will be our main confirmation indicator that will tell us if we must jump into a buy trade or a sell trade. Next, let's edit the settings of fluid trades. This is a smart money concepts indicator that shows lines of support and demand and break of structure. Usually when the price is in a downtrend and it reaches a demand level, it tends to reverse. The opposite happens when a market is in an uptrend and reaches a supply level. As you can see here, the price was on the way up, then entered a supply zone, bounced off the resistance and then reversed to the downside. Let's now edit the money flow index. Now we can barely see the line here, so let's go to the indicator settings and in the style section, let's change the color of the plot so that it's more legible. This indicator helps us identify if the market is overbought or oversold. When the white line crosses into the green section, the market is considered to be overbought. When the line crosses into the red zone, the market is considered to be oversold. Okay, so now that we are all set up, let's learn the rules we must follow before jumping into a trade. To enter in a long position, we need the following 3 conditions to be met. First, the price action must pull back into the level of demand. It must either touch it or come very close to it. But if the price crosses and closes below the level of demand, we then skip the trade. Next, the Q trend indicator must issue a buy or strong buy signal. Lastly, at the time the Q trend indicator issues a buy signal, the money flow index's white line must be in the red zone, showing that the market is oversold. Once all 3 conditions are met, we are going to enter into a long trade at the close of the trigger candlestick. Our stop loss will be placed just below the level of demand. For our profit target, we are going to set our take profit at a ratio of 1:1. Once we reach that target, we increase our take profit to 3:1 and move our stop loss to break even. This way we are securing our initial profits and maximizing our potential profits. As you can see in this example, we were able to secure a profit of 3:1. Let's do another long example. We can see that the price recently pulled back into the demand zone, but it did not cross or close below it. The Q trend indicator just issued a buy signal, and we can see that from the money flow index that the market is currently oversold. All of our conditions have been met, so we are going to enter into a long position at the close of this trigger candlestick. We are going to set our stop loss to just below the demand zone and set our initial take profit at a ratio of 1:1. Let's see how this trade plays out. We can see that the price just hit our first take profit level, so we are now going to adjust our take profit to 3:1 and move our stop loss up to our initial take profit level. So the price went back down to our initial take profit level, closing the trade. Even though we didn't reach our target of 3:1, this was still a profitable trade. So now let's run through the rules for entering a short position. First, the price action must pull back into the level of support. It must either touch it or come very close to it. But if the price crosses and closes above the level of support, then we skip the trade. Next, the Q trend indicator must issue a sell or strong sell signal. Lastly, at the time the Q trend issues its sell signal, the money flow index's white line must be in the green zone, meaning that the market is overbought. Once all three conditions are met, we are going to enter in a short position at the close of the trigger candlestick. Our stop loss will be placed just above the level of support. Just like the long positions, we are going to set our take profit at a 1-to-1 ratio. Once the price reaches that point, we are going to move our take profit up to a ratio of 3-to-1 and move our stop loss up to the original profit target. Let's do another short example. Here we can see the market rejected a supply zone and we were then issued a sell signal. The white line is also in the green zone, so all of our conditions are met. Let's see how this trade plays out. And this turned out to be a great trade. Okay, so that's the rules and the setup for the strategy. I'm now going to backtest this 100 times on the BTCUSD pair on the 5-minute chart to find out how profitable the strategy can really be. Okay, so after backtesting the strategy 100 times, it had a win rate of 65%, and our growth on account was over 200%. Keep in mind that this will differ in real time due to spreads and fees. I was able to find these 100 setups in 46 days. The profit factor was 4.34, and we had 8 consecutive wins compared to 4 consecutive losses. Our maximum drawdown was less than 3%, which is great. These results weren't as great as TradeIQ's tests, which was a win rate of 84% and over 400% growth on account, but clearly different markets perform better than others. I definitely recommend you backtest and forward this strategy yourself. Now, as promised, let me show you how you can set up alerts for the strategy so that you don't miss an opportunity even when you're not at your screen. So, in TradingView, make sure you're on a pair that you want to follow, in this case BTCUSD. All you need to do is on the Q trend indicator, right click on either the sell or buy signal and select create alert. We will then leave the condition to Q trend and leave it on Q trend buy for now. Next, change the trigger to once per candle close and set the expiration date. Note that in order to make this alert continue forever, you will need to upgrade to the premium plan. Alternatively, just come back to TradingView and extend the closing date when it expires. Let's give this alert a name, such as the pair and what signal it is. Lastly, let's go to notifications. If you have the TradingView app on your phone, which I'd highly recommend, then select Notify on app. If not, select Send email. Then we click Create. We are going to have to repeat this process several times for all the different kinds of signals of the Q trend indicator. Simply right click on any of the signals, enter everything like you did before, but changing the signal type in the condition section and giving the alert a name that correlates to the signal. Once done, you will automatically get an alert each time a signal is printed. You then go to the chart and check to see if the price is recently pulled into a level of support if it's a sell, or level of demand if it's a buy, and that the price then reversed. Next, check whether the market is overbought or oversold. And when all three rules line up, you enter your trade as usual. That's it for this video, guys. I hope you enjoyed it and learned something new. If you did, please hit those like and subscribe buttons and let me know in the comments if there's a specific strategy you would like me to backtest next.